Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James with The Chart Guys. It's Tuesday, March 21st. Going to do my nightly video on oil. So oil has bounced from oversold conditions on the daily. We rejected at the 8 EMA here after getting this TCG bear cross. Again, TCG bear cross when the 4 EMA, my green line, crosses under the red line, the 8 EMA. We got a oversold bounce here, rejected at back test of the 8 EMA, and we pulled back. And what bulls wanted to do was to have this be the new higher low from this candle. And what you wanted to see is to start seeing a low, a high, potentially a higher low and a lower high, and find some equilibrium here, and then break out one way or the other. I said yesterday in my video, a red flag today would be when if we broke below the low of this candle here of 48.46, meaning that we haven't established a new higher low yet. So that's the first thing to do, is to establish a new higher low, which we haven't done yet. And this was potentially a bullish reversal hammer on this pullback, but it was not confirmed by this candle rejecting again at the 8 EMA. So on the daily, to play anything longer term than a day trade, you can clearly see where oil bulls have to get over is this 8 EMA now here. If we lose the low of this candle of 47.71, that's a big red flag. And if you look at the weekly, where it's bouncing from, so I have this weekly uptrend line here, and it did bounce there again on the daily from oversold and on the weekly, but it's not looking strong and convincing yet, as this week's candle is not confirming this potential bullish reversal off the uptrend line here on the weekly. So oil is still weak. On the hourly charts, every bounce so far has been just a bit of an oversold bounce. So we had this oversold bounce, pull back, oversold bounce, pull back, and right now we're continuing. After we started setting higher, so we had this low, we set a higher low, another higher low, another higher low, another higher low, and then once that trend changed, we've been setting lower lows on the hourly, so we need to change that trend first of all on the hourly. So that's something to watch for tomorrow. Every bounce so far has been oversold bounces only, and not to be played for anything else but oversold. So right now, with the hourly TCG bear cross confirming going in the same direction as the daily TCG bear cross. So daily TCG bear cross, hourly TCG bear cross going in the same direction. So that's all bearish. And once we lost this 8 EMA here on this TCG bear cross on the hourly, you can see the multiple rejections, 1, 2, and another one here. So that's the first step, is to regain the hourly 8 EMA and then try to establish a real higher low on the daily, and then go for that daily 8 EMA. We have oil inventory reports tomorrow. Anything could happen. Again, break below the low of this candle here of 47.71 is a big time red flag for any type of continued oil bounce that's sustained. Again, the daily RSI is oversold, but there's a lot for bulls to do to turn things around. And on the unadjusted charts, when you look at the volume on the daily, what you're seeing is increased bear volume on the daily here, with it pulling back. So you want to start seeing on any other pullbacks here, if it continues to pull back, you want to start seeing some decreasing volume here for the bears to tire out and potentially create a bounce. So tomorrow, watch the levels here on the inventory reports. The low of today, 47.99. If that breaks, that means this again is not established higher low yet. And then obviously if this candle breaks here, the low of 47.09, huge red flag, and likely more downside on the weekly. And on the unadjusted charts, the next support I have here, so I have this trend line here on the unadjusted charts where we could potentially test it there. And we also have this one, which is bouncing off of currently. And then we have this really much longer term one, which it already broke bearish. So those are some support levels to look at on the unadjusted charts. Tomorrow's inventory reports, we'll see what happens. Again, first thing we have to do is regain the 80 MA on the hourly, create a TCG bull cross, and establish a higher low on the daily chart, which bulls haven't done yet. So have a good night, and I'll see you tomorrow.